GTCO becomes first Nigerian bank to reach 1 trillion pre-tax profit in 6 months. Nigeria's debut domestic dollar bond sees 180% subscription. Welcome to Market Pulse on News Central in partnership with Nairametrics. I am Perpetua Fasamapita, standing in for Joanna Mustafa. We begin by diving into the most impactful global stock market news. Microsoft has announced a significant workforce reduction, cutting 650 jobs in its Xbox division. This marks the third round of layoffs this year as the company seeks to manage costs following its $69 billion acquisition of Activision Blizzard. According to Xbox chief Phil Spencer, these job cuts mainly impact corporate and supporting functions, with no cancellations of games or studio closures. The move is part of a broader effort to streamline Microsoft's gaming division amidst rising costs and competition in the gaming industry. Earlier this year, 1,900 jobs were cut, many from Activision units. And now turning our attention to China's AI chip industry, two of the country's leading AI chip makers, Shanghai Enflame Technology and Bahrain Intelligent Technology, are gearing up for initial public offerings, IPOs, in Shanghai. Enflame aims to raise 2 billion yuan via the STAR board, while Bahrain plans to follow suit. These companies are capitalizing on growing investor interest in domestic chip makers, which have become crucial to China's geopolitical strategy amid US sanctions targeting the tech sector. Backed by major investors like Tencent and IDG Capital, both companies are positioning themselves as key players in China's AI and semiconductor ambitions, aiming to challenge international giants like NVIDIA. We come closer to home as we take a look at trading day on the NGX. And now taking a look at the NGX, we'll begin with the summary. It says that the Nigerian exchange saw an uptick as the all-share index rose 310.13 points to close in the green territory. And that, of course, is the NGX CSI. If we can have the snapshot right here. So we have a look of how the market went today, up 0.32%, closing 97,025.17. I mean, we've gotten to the 97,000 mark, and of course, market capitalization closing 55.75 trillion naira. And now to top gainers, we have Caverton, we have FBN Holdings, we have Flammy, we have Artibrisco, and Nestle. Artibrisco has sort of become a household name, if you ask me, because it's either on the top losers or top gainers table. And finally, we have Nestle right there with 9.88% gain. And Nestle, by the way, added 80 naira today to close 890 naira. And now to the top losers, we have DAR Communications, Itana, Universal Insurance right there. We have Sovereign Insurance, and we also have International Breweries. You can see the percentage change right there, 8.86% down, 8.14% down, 7.69, 5.95, and 5.32%. Now to the top movers. For top movers, we have Access Corporation giving us the best or the biggest volume at 80 million. FBN Holdings 52 million, UBA 31 million, Caverton 24 million, and Zenith Bank 19 million. You see that we have the banking sectors very active right here. I mean, they're not getting tired yet. And we have Access giving us the value 1 billion, FBN giving us 1 billion naira right there. Well, we have a whole lot more for you. And then for currency, we see the Nigerian naira close 1,652 naira 54 kobo against the US dollar. Ghanaian cedi, of course, closed to 15 cedi 67 per C, while we also have these other ones right there telling us or giving us a picture of how currencies sort of closed today. Now, up next, we will be picking a pulse of the day with the head, fixed income and forex, Chapel Hill, Denham. Oladipo, Ajayi, stay with us. Glad to know you stay with us. And picking a pulse of the day, Nigeria's domestic dollar-denominated bond has been oversubscribed by a whopping 180%, signaling strong investor confidence in Nigeria's economic future. Fixed income and forex, Chapel Hill, Denham. That's fixed income and forex head, Chapel Hill, Denham. Oladipo Ajayi joins me for this. Thank you, Oladipo, for joining me today.
Yeah, thank you very much, Patricia, for having me on this evening.
Right. We had a conversation about the debut domestic bond, and you were quite optimistic about it. So my guess is that you were not disappointed by this result.
Well, like I said earlier, I'm actually not disappointed just because I know very well that there's a lot of funds sitting down idle in the country looking for investment destination. And opening up this kind of investment opportunity to Nigerians and also Nigerian diaspora, I think it's a laudable one, and a lot of people are able to actually take advantage of such. So I'm actually not surprised with the level of subscription that we had on the transaction.
Let me add to that. Nigeria's dollar surged 4.8% against the dollar yesterday, Wednesday, the biggest increase since July 22. So do you think this is due to the announced oversubscription of the dollar bond? I mean, we're beginning to see a lot of persons link this. Is that what you also think?
Well, I don't think that's it, because I know very well that the central bank was in the market to intervene yesterday. So I know that also impacted the rates at the level at which markets also traded. But I won't actually divulge the fact that the offers was oversubscribed from also the positive reaction in the market yesterday. Because what it simply means to people is that means that the central bank has more funds now to actually allocate to the market, and which could also actually down the current pressure on the currency. So all in all, I think it also has a contributing factor to it, but I don't think that's the main thing. It was like a result of the supply to the market by central bank yesterday.
Well, and just like you said, you can't totally divorce that, right? Okay, so what more do we need to know about allotment? I'm not sure we have all the specifics around the total amount of subscriptions and what was allotted. Do we have that now?
I think based on what was on the paper currently, I think it was oversubscribed by 180%. So it simply means that the government actually offered 500, but total subscription was about $900 million.
Let me button here. You're saying it simply means. Are you sure? Are you sure about what was allotted?
Yeah. So based on the information from the finance minister, the information is that it was they allotted the whole $900 million, and I'm actually surprised because I don't expect us to only take $500 million and now wait another time to come and open, when we know that we actually need this fund at this particular point in time. To be realistic, we need this fund. And currently, imagine the offer is oversubscribed to about 900 million, and you now decide to just take 500, and you leave the $400 million on the table. And that simply means that you come at a later time to come and reopen this offers again, maybe sometime next year. So I think it makes a lot of sense to actually want to take the whole $900 million. Because what we need currently is that we need the dollar element to be able to actually clear some of the pent-up demand that's currently putting pressure on Naira, and so as to actually create that stable market that we all have been clamoring for.
You know, we've all talked about how that, loans in itself, or loan in itself is not bad, but what matters is to what use it is put. Are you concerned about this particular? Because we didn't really get specifics. We only hear, okay, we will do something around infrastructure. We keep hearing rhetorics. Are you sure that, at the end of the day, there will be value for this?
Well, like you said, this fund is not targeted to any project like that. It's not a sukuk bond. If it's a sukuk bond, of course, we can actually see the elements that the government is actually allocating this fund to. So it simply means that this will form part of the whole budget for the year 2024. And if you check the budget, when the budget was approved, part of what was mentioned that about 7.9 trillion will be borrowed in local market, and Nigerian government also mentioned that they were also looking at raising money in the foreign market. But based what's currently on the table, I don't think we are going back into the Eurobond market this year again, because I think we have just about 3 months to the end of the year. And based on what the government has done, it simply means that that's the part of the element that will actually cater for the international borrowing, because it's dollar denominated. So I think the way it will be actually allocated, it will just form part of the budget pool, and what we actually expect such funds to be allocated to the infrastructural development. There are a lot of projects that are actually currently on ground that the government is working on. We expect them to actually speed up this project with the availability of this fund, so as to actually help to actually improve the standard of living of the people.
Right. For those who missed out on the primary market, I'm sure they have other opportunities in the secondary market. I mean, what's your outlook for that?
Well, one good thing about secondary market is that it creates room for people that are unable to actually buy in the primary market. They can actually trade in the secondary market to actually buy some of these instruments. And one good thing also for the people that participated in the primary market means that they don't necessarily need to hold this instrument till maturity, which is like 5 years time. They can as well just sell within the lifespan of the instrument. So it means that 2 years down the line, if you actually need funds or there's liquidity need, there's a market that's created already for you to be able to actually exit your position. And this instrument will be listed on the NGN. You also be listed on the FMDQ platform as well. So it means that anyone that actually has CSCS account, you can actually trade this instrument by yourself. You can go on any of these, any of the brokerage portal to actually buy this instrument to your position, or when you can also sell from your position. And I think it's a very good one because when you create an outlet like that, it helps to actually deepen the market, and that's one of the good additions to the program.
Well, for those who might be curious, they want to know, do they need up to $10,000 before they can participate in the secondary market?
So that's one thing about secondary market now. Secondary market, you may not necessarily need up to 10,000 to be able to participate in the secondary market. For example, someone that bought $10,000 worth of value can come to the market. Maybe the person does not want to sell everything, he just needs $2,000. The person can go to the market and sell $2,000 out of the $10,000 that was actually allocated to that person. So it simply means that people can actually get to buy in lower, smaller chunks. And that is also a very good one for people that actually want to participate in the secondary market.
All right, just before we close, I'd like you to talk to us about the implications of this historic event, as some already call it, and its potential impact on Nigeria's capital market and economic development.
I think this is a very good one, and it also confirmed the confidence that some people still have in the country. And it also confirmed the fact that, like we all have been saying for a long time, that there's a lot of funds that people are doing in the country, and that the government can actually mop up some of these funds for developmental projects rather than actually looking offshore every time to actually raise funds. So it's actually a laudable one, and I think it's a great one because most African countries now would actually want to toe the line. Because considering that they've seen how Nigeria has been able to do it and they've been able to do it successfully. So you open doors to other African countries that are looking at actually raising funds in this dimension. And I think it's a very good one. It's a very good product for the market, and also a very good draw for investors to actually push their funds into. And the one good thing about this program is the fact that it's a win-win. Is a win-win for both the investors and also the user, that is Nigeria.
Mr. Ajayi, I'm afraid we have to end this here. Thank you so much for your time and your thoughts on the show today.
You are welcome. Thank you very much for having me on this evening.
Right. If you're just joining us, this is Market Pulse. And of course, it's Market Versus with Frank. Frank, I mean, you have the floor now.
Exactly. Thank you very much. Welcome to Market Versus. I'm your host, Frank. And today we're diving into the Nigerian banking sector with a focus on some of the country's most profitable institutions alongside the powerhouse. We have GTCO. But first, let's check out some news that has been making the rounds in the world of business, especially in the market. Nigeria's major banks are making waves, posting profits at levels not seen in years. GTCO has led the pack with an incredible 1 trillion naira profit. And that's really a massive, massive milestone, making history as one of the most profitable financial institutions in the country. However, it's not just GTCO that's thriving. Other banks, the likes of Zenith, the likes of UBA, Access Holdings, are also enjoying unprecedented profitability. Here's a quick breakdown of the key highlights. Zenith Bank reported a profit before tax of 350 billion naira, up by 169%, driven by both interest and non-interest income. You see, UBA also posted a record 404 billion naira in profit before tax, a 371% surge from the previous year, supported by its robust operations across Africa and internationally. Access Holdings wasn't far behind, with 202 billion naira in pre-tax profits, reflecting a 148% year-on-year growth. Now let's talk about some of the reasons behind these huge gains. A significant factor has been the devaluation of the naira. If you look at what has happened over the last few months, we can see that the devaluation of the naira is one of the major reasons why we're having these huge gains, which has positively impacted banks holding, and that banks that are holding on US dollar long positions. This reevaluation has boosted non-interest income streams, such as fees, commissions, enabling these banks to post higher profits. But what does this mean for the investor and everyday Nigerian? I think that's the major thing we need to take a look at. For investors, the robust profits signal that Nigerian banks are capitalizing on economic shifts, making them an attractive option in uncertain times. For Nigerians, the profitability of these banks could mean more opportunities for lending and financial services, although inflation is also a major issue and the weak naira continues to challenge every purchasing power. But we can see that if you go to the bank and you want to get access to loans, then you see because of what has happened with the NPR, then you have access to all of this. With these strong performances of Nigerian banks, are they going to continue? I don't think so.
Well, I guess that's a question that will be answered in the coming days.
Yes, we might want to take a look at that. But I think over the years, we've seen that the banks have done exceptionally well, especially with what we've seen with the FX gains. You see the government literally
absolutely, and there is that question about, what happens, because at the end of the day, you see that a good number of all of this comes from interest income and, of course, the revaluation gain and all of that. But, of course, we have to end the show right now. Thank you so much for being a part of the show. Well, that's what we have for you today. Many thanks for being a part of Market Post today. See you again tomorrow. I am Perpetua Fasame Peter, standing in for Joanna Mustafa. International Index now.